Okay, drum roll, please. The CPI number or the consumer price index, inflation numbers, it came in at, bam, you see it on your screen, 7.1%. It's lower than expected. So what did we predict yesterday when I said, well, if the number comes in lower than expected, which I kind of think it's going to, you're going to see the markets rally and rally quite a bit, and you're going to see mortgage rates plummet. So let's get over to see how my predictions weighed out, because the inflation number came in at 7.1, actually cooler than expected. So we go over to the stock market. What's this Dow Jones doing? Well, the Dow Jones right now is up 500 points. Let's see what the MBS market's doing right now, and we're going to encapsulate this here all in a minute. It's up almost 100 basis points. So what in the world am I talking about? Well, today the CPI number come in, the consumer levels inflation numbers, and they came in actually really, really good. We're starting to see inflation come down. You're going to see, here's some contrarians come back and say, well, we're still way above where we were, where the Fed wants us to be at 2%. Well, yeah, but like I always say, this is kind of like a diet. Okay, if you're overweight by 100 pounds, you're not going to lose 100 pounds in basically a week. It's going to take time to start, losing that weight. So you're going to lose, 5 pounds and 10 pounds and 5 pounds and 10 pounds. As long as that your streak is going well, where you're continuing to lose weight, you didn't go, well, I gained 20 pounds last time because I just went on a binge. So we are starting to see all this play in a check. So what we also know, or what I know, and what I'm going to share with you guys, is the housing number in the part of the CPI, the Consumer Price Index, is one of the biggest factors. It's about 40% of that number. We're starting to see housing, especially rents, taking a pivot. They're turning and they're starting to go down. So those numbers are going to take a little bit of time to work their way into this number, but when you start seeing that number come in, as well as everything else coming in, you're going to see this inflation rate really starting to drive down. Now, where it's going to be sticky is wages, and the Federal Reserve already has its pain triggers out on you guys, because they're expecting, or they want to push the unemployment numbers up, meaning more people unemployed. And that's what their focus in on is right now. They've already crashed the housing market. Well, not crashed it, but it corrected. And they now have their focus in on the jobs market, especially wages, to really start bringing this down. So yesterday I called and I said, well, if you see this number coming in, better than expected, we're going to see rallies in the market and so forth. And that's what we're seeing so far today. So let's get over to the numbers that came in just now. And we have the core CPI, and then the CPI, and then the year over year. So what you're seeing on your screen is the core CPI. What that does is it extracts out or pulls out of the numbers food and energy, because those are hugely volatile. They change. Look at gas prices. Gas prices 3-4 months ago in Illinois was about $6 a gallon. I'm checking right now. I just had to get gas last night and it was $3.20. So it's almost half of what we were paying just 3-4 months ago. So that's going well. But like I said, the sticky part of this whole equation is going to be wages. That's one of the areas that we're going to really stay focused in on. So here's what you're seeing. The core CPI, which strips out food and energy, it came in, it was up 0.2. Previous reading was 0.3, and the expectations were to come in at 0.3. Okay, so then let's look at month over month. That's what they really try to focus in on, because year over year, there could be some blips in the radar somewhere, but we want to see month over month. That gives us that like weight loss thing. You weighed in last week. Where were you? You weighed in this week. Where are you? Well, the previous reading on the CPI month over month was at 0.4. Okay, so that means things went up in prices by 0.4%. Might not seem like much, but it's 1 month. So you extract that over 12 months times 12, you're about a 5% rate there. Okay, so just hope you understand that part of it. We came in at 0.1. So now you extract that out and it comes in at 1.2. Okay, so you're either at 4 point something or 1 point something. Okay, I'll take the 1 point something. Okay, so we're going on the right path. Then you have year over year. We were previously reading was 7.7. We're at 7.1, so a little over 0.5% lower there. So I love these numbers, and they're going to continue to cool. We have oil prices down. We have lumber prices down. We have everything imaginable other than wages are starting to come back down. So we love this. Why do we talk about this? Well, the whole purpose of this is trying to find housing affordability. So all this in the context, we're starting to see housing prices correct. okay, which is well over needed. And I'm coming out with a real estate roundtable that I'm accumulating all my seats members. So I'm going to come out at the beginning of January and have a real estate roundtable with a bunch of YouTube influencers in this space, and we're going to give you our predictions and we're going to debate it. Why, we're predicting what we're predicting, and then we're going to just give you our predictions. So I'm not going to spoil that right now, but I'm just going to give you, I don't expect housing prices to plummet. Just saying that in 2023, but you'd be probably surprised at what my verdict's going to be with a lot of things. So that's coming up in about 2 weeks. That'll be the second week of January. So let's get over to see where these things are taking us. Let's go back down to the Dow Jones. The Dow Jones is down or up 580. You just saw it click. It was up 600. So the stock market's loving this. The bond markets are loving this. Let's go over to the MBS market. So here's what you see in the MBS market. Why are we watching this? Well, this is actually telling me what's going on with mortgage rates. Okay, this is a bond that trades on Wall Street. It's called the MBS, mortgage-backed securities. What you're seeing on your screen is the price of that bond. All I got to explain to you guys is the price and interest rates have an inverse or a flip-flop relationship. So on your screen, what you're seeing is the price of the bond. As this price goes up, which you hardly ever see in the chart in the last year, but when this price goes up, rates are coming down. So what you're going to see on the screen right now is it's almost up 100 basis points. That is a huge move. So what you're going to probably see is at least a quarter to 3/8 off of rates today. So let's get over to see where rates ended yesterday, because this is now going to affect this. So yesterday, where we saw mortgage rates end, and this is published by Mortgage News Daily, what you're seeing on your screen. If you want to get this on a daily basis, you can subscribe to it down below. It's direct link, or you can subscribe to my newsletter, which gives you this and a ton of other information. But what you're seeing here on your screen right now is, let's just focus in on the 30-year fix. We're at 6.39. Could we teeter on hitting back in the 5% range? Remember, just a couple months ago, we were where? 7.375, 7 3/8. Can we now be within 60, 90 days back in the fives? That's what I was expecting, and we're starting to see that come into play. So my name is Dan Frio. I do this report every day. Why I do this is I'm trying to educate and inform you guys what's going on in real estate, especially the younger people that are looking to say, okay, I'd really like to get out of renting and I'd love to get into a house. I don't know when that is, but when you do decide to do that, I want to make sure you're an informed consumer, because information and knowledge is key, especially in real estate. So we want to find you, if you're looking for a house, where are you looking to buy? Maybe we can help you buy there. But what we focus in on here is the financing piece of the puzzle. We explain all the products, how much you need down. Is there first-time home buyer products available for you? Are there down payment assistance programs? What programs are out there can really help you guys? And that's what we try to strive on this channel. So don't forget, tomorrow's going to be a huge day. We're going to actually come and do a live event right when the Federal Reserve comes out and tells us what they're going to do. Because right now, this week, the Federal Reserve is meeting. They're going to come out tomorrow and tell us, are they raising rates? How much are they going to raise them? And then we're going to talk about that tomorrow live. And then tomorrow evening, I'm going to be joined with Kyle Seagraves of Win the House You Love. Check him out. And we do live events every Wednesday at 5 Central Standard Time, 6 o'clock Eastern Time. We do that to answer any and all your questions live. So if you're a first-time home buyer, a first-time investor, or you just are interested in real estate, please join us, because we usually are on there for about 2 hours. We try to answer every question that's posted. So if you like my content and you like what I do, please visit me at therateupdate.com. This tells you all about me and my team, what we can do. We are a federally chartered mortgage advisor. We're basically a bank who acts as a broker who is federally chartered. So if you're anywhere out in the country and you need help with a mortgage, please reach out to us. The best way is just go to therateupdate.com. You can call us, book a meeting, apply online. But if you already got a loan estimate or a quote from another lender, we have a free service for you guys. All you need to do is go to the website, therateupdate.com, the loan estimate tab right here. All you need to do is click that, answer a few questions, and upload your loan estimate from the other lender in here. We're going to scan it with over 85 of the country's largest banks and mortgage companies and get back with you. And I can almost assure you, we're either going to get you a lower rate, lower fees, or in most cases, all of the above. Can you imagine getting a lower rate and lower fees? Check it out. You have nothing to lose and everything to gain. So thanks so much for watching today. If you find value in my channel, or you find entertainment or at least educational values, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. God bless, guys. Thanks so much for watching. I'll see you tomorrow. Bye-bye.